Hey, it's your financial maven. I am back. Like I mentioned in December, my podcast might be a little bit few and far between. It is tax season. I hope everybody had a good holiday season, a happy new year. I know a lot is going on in the world, but I am here to talk about tax season. So that's what I'm going to be doing and all. But I want to reintroduce myself a little bit before we get started. I'm Samantha Besnoff. I'm a certified public accountant, independent life insurance agent, and a financial education empowerment consultant. As you can see through my podcast, I do a lot of financial education, especially for women and small businesses. So I think that's very important. I do have some guest interviews coming up that I'm going to be working on in February. So look for those sometime in March and April. April is Financial Literacy Month, so I'm hoping to do a few more things there as well. I have been an accountant for over 30 years, a CPA for over 24 years. Held a variety of accounting jobs and have been on my own now for 12 years. So I have a lot of experience. I do a lot of work with small business owners and individuals, in particular with accounting and, of course, with tax. So I love to get on here, talk to individuals, talk to small business owners, talk to people within the field. That is a lot of my podcast. And I have here and there been having myself come on and just chat with you. And that's what I'm going to do here today. I just want to give you a little bit of updates. Like I said, it is tax season. I see and I am on social media and I see what people are talking about. In fact, I was just scrolling through TikTok the other day and somebody was talking about the no tax on tips and the no tax on overtime. There is a lot of misinformation out there, unfortunately. And hopefully, those of us like myself as a CPA, tax professionals, can get the word out, can really get people to understand this new tax law, what that means, not just for the 2025 tax season that we're filing for. It is 2026, but we're filing our 2025 returns. But what it means for 2026 through 2028, the new tax law, a lot of these are only from 2025 through 2028. So it's really, really important. You can listen to some prior episodes of mine where I talk about the OB3 bill that was passed in July of 2025. But today I'm going to give a little bit of information just so that everybody is aware. And hopefully, going forward, we can get through this tax season with a lot less stress and a lot more knowledge. So I'm going to jump right in and I'm just going to say that the IRS did announce last week that e-filing will open January 26th. What does that mean? Well, you should be starting to get your W-2 forms. You will start to get your 1099 forms. So these 1099 forms can be interest, dividends, non-employee compensation, which is an NEC or miscellaneous form, 1099B, broker statement. Sometimes when you're working with a broker, let's say Charles Schwab, Edward Jones, you'll get a combined one for your interest, your dividends, and any stock sales you might have, anything else related to that. It's really important that you make sure you have all those tax documents before you file. If you know that all you are is a W-2 earner and all you're getting is W-2s, you're not getting any of these other documents, 1099s, K-1s from partnerships or S corporations, you can go ahead and file. You can file your federal, your state, and in some cases local. So I'm out of Pennsylvania and we have to do federal, state, and local income taxes. This is for your earned income. So it's really important to know where you're living, what you're working on. If you are filing them yourself, using a tax software yourself, majority of tax softwares do not file that local return. So it's really, really important, especially to my Pennsylvania listeners. If you're filing your own taxes, you have to go to your local taxing authority, either their website or call them, get the forms to file them manually or online. Most of them can do online now and file that way. Your tax software will not file. Now, it might prepare the return for you to review, but it will not file that local return. So it's very, very important you pay attention to that. What will e-file look like with the IRS? I honestly don't know what will occur once they open up. I had heard that there's potentially no direct file. I don't know that until we see it. Remember, a government shutdown in October of 25. So, that kind of had the IRS being delayed in certain things. So very important. to understand where you can go file. There are services, I do believe VITA, which is Volunteer Income Tax Assistance Services, are still around. And that is, I believe it's for 75,000 and less in income. You can go and have your returns prepared by them. I believe they do federal and state, but you have to double check about state and, of course, local, wherever you are, if there is local. Another thing to know, with your taxes. It is extremely important, in my opinion, I feel very strongly about this, to go to irs.gov. And if you have not already, create your IRS account. Why is this important? I'll tell you why it's important. You will be able to see prior year tax returns, pull up prior year transcripts related to wages or income, see if you owe anything, see if you should be getting anything back, taking a look at if you made estimated tax payments for federal, what are your estimated tax payments? So it's really important to have that account. It's also important for two other reasons. If you are working with a professional like myself as a CPA, enrolled agent, tax preparer, you can give them, through this portal, they'll have to request it and then you have to approve it, the ability for them to do taxpayer information paperwork so that they can review specific tax years, which is very important, especially if you're going to a new accountant and they don't really know or have everything that you filed. They can request to take a look at prior year returns. You can approve it, and then they only have those returns to take a look at. So it's really important for that. And the second reason, and I feel very strong about this, is to get your identity PIN, your taxpayer identity PIN. Why? Well, when you go to e-file, you want to make sure you're protected, right? So even if you have a tax professional helping you, having that extra layer, that PIN, that extra thing to do, um, is important because it protects your return. Now, if you are filing married, filing jointly, each of you need to go into your own irs.gov account. I have said this before, and I will continue to say this. When you file a joint return, the IRS still looks at you as individual taxpayers. You're just combining your information. Now, if you share an email address, that could be a problem. So you're going to have to create an account. I think through ID.me is the best way to do it. It verifies your identity. And then you're each going to have your own email address and your own phone number in order to do this. Your spouse, or if you're the taxpayer, you cannot look at both of yours and your spouse's on your account. Every taxpayer has their own account. Here's the other thing you need to be aware of, and this is something that really came out with this new OB3 tax bill. You have to have a social security number. They're really cracking down with tax returns for certain deductions, certain credits, certain things. So having a valid social security number is important. The other thing with that social security number is your name has to match what is on your social security card. When you go to file your return, if you put a different name on it because you're in the process of changing it and you haven't changed your social security card, your return will be rejected immediately because they cannot match the social security with your name. So keep that in mind. I understand it can be a pain. Believe me, I finally, after 2.5 years, got everything organized and straightened out with my name from my social security card, my passport, and my driver's license. It was not an easy process for me just because of all the things I had to do to get it changed. Not saying it'll be hard for everybody. So that's very important with the IRS. Now, you also have to file your state returns. So you can find out if your state, they should have online website, online access to file returns. There might be the ability to go on and see your account there as well. I know in Pennsylvania, we use MyPathPA. It's okay. I can't seem to get some of my prior year returns under my name and social security number, but I know that when I make my estimated payments and I go in and I search for it with the code that they gave me, I can find it. So that's very important. And also in the state of Pennsylvania, your local taxing authority, you can set up your own account there as well and do a lot of filing and payments and stuff through that. So that is very important to be aware of. Here's the other thing you need to be aware of. If you're not sure what tax forms you're supposed to be getting, don't file your return as soon as the IRS opens on the 26th, because then you're going to have to go back, you're going to have to amend the return, and it really could cause a problem. Now, small businesses, partnerships, corporations are due by March 15th. So if you're expecting a K1 from an S corporation or a partnership, you need to wait until that business return is filed and you have obtained your K1s in order for you to file your personal returns. Remember, personal returns aren't due until April 15th. I understand the need to want to get it in. If you're getting a refund, you want that sooner. But the issue is if you fail to report income, then you're going to have to amend your return, because here's the thing: your W-2, your K-1s, your 1099s, they don't just come to you, the taxpayer. They go to the IRS, Social Security Administration, to your state, to your local taxing authority, if that applies. So it's important that you wait. What I typically do is I'm working on my business clients right now. I will not start to prepare my individual tax returns for my clients until February 15th, only because that gives me some time to work on the business returns. And then some of my clients are both business and individual. So if I finish the business return, I can then work on the personal return. Something to keep in mind with that regards. The other thing you need to know is if you are waiting for a K1 from a partnership, an estate, a trust, a S corporation, and they say to you, or you haven't received it by March 15th, the K1, they most likely have put it on extension. So you need to find out if it's on an extension, and then you need to find out how long that they're going to be extending it till, meaning how long are they going to work on it till they finish it, because if it's on extension, then it won't be due till September for the business. And you may have to put your return on an extension because you're waiting for those documents. And this is what I tell my clients all of the time and other people. It is an extension of time only, not if you owe money. So if you think you're going to owe and you have to put your return on an extension, you need to pay something by April 15th, or there will be penalties and interest, and you'll owe more when the extended return for personal, which would have been done, due in October, comes due. So keep that in mind with regards to extensions related to that. And I have my notes here because I just want to make sure I have everything for you. I did ID pins. I said when business and individual returns are due. Oh, here's something that the IRS came out with. This was, I think, March, April. I've made some quick comments about it. I've done some social media about it related to deposits and payments owed to the federal government. The federal government, as of September 30th, 2025, if you are getting a refund, it is all done electronically. I have some resources and links on my website. I'll put it in the podcast note as well. What that means is you have to give them your bank information in order to obtain your refund. They have a few things, debit cards and things like that could possibly be worked through. I don't know how that will look on the return for that request, but they are not issuing paper checks anymore. They're just not going to be doing it. And with regards to payments, they're going in that route. So you still have the ability to send a check in, pay online, have it auto withdrawn when you file your return. But they're moving away from paper checks, even for tax payments. So we have to be aware of that. You have to understand that. If you do need to send in a payment by check, now remember, this is the federal government. You have to check with your state and your local because they are probably still accepting checks. Either way, if you write a check and you send it through the mail, please send it certified receipt return. I know it's a little extra money to pay for that little card to fill it out for certified receipt return, but it is very important. And here's why. Something else just came down from the Treasury Department, from the federal government, related to post dates, mailing things through the post office. And I've talked about this before. I'm sure you've heard about it from other people as well. They are no longer accepting that if you just drop it off at your post office, that date is not necessarily stamped right then and there because they send it to a larger facility to get processed. Well, that could take a day or two. So if you drop something off at tax deadline and you don't either send it certified receipt return, ask for it to be postmarked, where they'll stamp it postmarked on that date. The date will be whenever it's processed at the major facility, and the IRS will say it's late. So that is why I say you go pay by check, take it to a post office, send it certified receipt return, and ask them to post date it, stamp it, the date that you're there doing it. Very, very important. And that's the same thing if you're going to file your return manually. Paper returns are still accepted in some cases. Certified receipt return, make sure it's post dated. it's really going to cause some stress, I believe, but being aware of it is important. If you're filing it electronically, when you file it, the date of transmission is the date it is accepted. And I always tell my clients this too. What it means by accepted is it accepted your filing, does not mean it won't be reviewed by the taxing authorities, by the IRS, your state, and your local, if that applies. It just means your return was filed on time. That's all it means. So it's important to be aware of that. Other things to be aware of. If you decide that, you know what, I really want a tax professional to file my return this year, one, don't wait until April to call around, because most CPAs, tax preparers, enrolled agents, they'll just put you on extension and they're not going to bother with your return right away. That's what I do. All of any new client I take up through March 15th. Most likely can get the returns done, but there is that caveat that an extension may happen. So don't wait. The other thing you need to make sure is make sure your preparer has a PTIN, a preparer's tax identification number. It is absolutely required by the IRS. You can go onto irs.gov and under the search, you can look up tax professionals and you can search your tax professionals to make sure they have their PTIN. It is a requirement that we have it. If you go to somebody and also engagement letters, I always give my clients an engagement letter. It is something that is very important. It explains what I'm going to be preparing, what's my liability, what do I do for you, what is your expectation. If you do not get an engagement letter or they refuse to give you your PTIN, red flag. They're called ghost preparers. If they refuse to sign your tax return, ghost preparers, and that can really get you in trouble. It can cause a lot of liability issues. So please make sure you are aware of that in that regards, because I always look out for the taxpayer. I want to make sure it's getting prepared properly. I've had clients, I mean, like I said, I've been doing this a long time on my own, working for other firms, and I can tell you I've seen it, almost all of it. And it's a shame when someone comes to you and they were in a very sticky situation. It could lead to penalties, it could lead to abatements, getting in trouble with taxing authorities. It really, really could be a problem. And real quick, I'm going to go over the three things on the OB3 that I think are important, but there's a lot of change in the tax law. When they say no tax on Social Security, tips, and overtime, it is a misnomer. You still have to report your income, and you still are going to be taxed on that income, but you could potentially get a deduction to reduce that tax. So for Social Security, it's anybody over 65 and over. Married filing jointly, you cannot do it with married filing separate. Single and head of household can do it, and qualifying widower. Married filing separate does not get these deductions. So you have to make sure you're aware of that. It is reduced by some potential, where your gross income or adjusted gross income could be. And like I said, it is a deduction of up to $6,000 per taxpayer. So again, reducing the tax that you have paid already. You have to report your Social Security. Same thing with tips and overtime. The thing about tips and overtime is there are certain qualifications. So you'll have to look what those qualifications are, whether or not you can take it. Overtime, it is special overtime or overtime above and beyond what you normally would get. And both overtime and tips have to be reported. You have to show the income and the income tax on it in order to get these deductions. These three deductions are from 25 to 28. So you have to be aware of that. The other thing are the T accounts, the IRA accounts for anybody born between 25 and 28. There is a special election form that should be out by July. I don't know if it'll be as part of your tax return. You can certainly talk to your tax professional. You could certainly Google that on the IRS's website and look up what those accounts are. They, like I said, are for anyone that is born between 25 and 2028. It's $1,000 that the government will fund, and then it works similar to an IRA. There are some limits and things like that. Other than that, just look for hopefully another week or two. I'll give a little bit more update. I can give a little bit more on the tax law, although I have resources on my website, yourfinancialmaven.com. Please like, share this podcast, and hopefully you can feel free to subscribe. I do have the ability for you to make donations to help fund financial literacy, which I'm very passionate about. So feel free to do that. Check out all my other episodes. Like I said, April will be 3 years. I'm getting close to 60 episodes. I love doing this, and look for my upcoming interviews. Like I said, they are scheduled to go in February and should be out by March. And for now, this is your Financial Maven.